Good morning, everyone. My name's Kurt Huntsinger. On behalf of everyone here at Habeff, Arrighetti & Wynn, I'd like to welcome you to a panel discussion, Accessing Capital in These Uncertain Times. Before we begin our discussion, however, I'd like to take a few minutes to introduce you to the members of our panel. Jim Green, here on my left. Mr. Green is President and Managing Director of TM Capital. Previously, Mr. Green was Managing Director and Head of Corporate Finance for Prudential Securities Investment Banking, where he assumed overall responsibility for the firm's corporate finance group. During his tenure at Prudential Securities, Mr. Green was responsible for a diverse group of middle-market consumer and industrial client relationships, which resulted in nearly 200 completed transactions valued at over $15 billion. Prior to joining Prudential Securities, Mr. Green was a Vice President in the investment banking group, Thompson McKinnon Securities. TM Capital is an independent investment banking firm based in New York, Boston, and Atlanta, which has completed over 200 mergers, acquisitions, and financings with a combined value in excess of $11 billion for its global roster of clients. For 20 years, TM Capital has provided its client companies with the expertise, resources, and focus necessary to structure, negotiate, and close strategic transactions. TM Capital is a member firm of M&A International, the world's leading alliance of mid-market investment banks. Next to Jim is Mr. Tom Avery. Mr. Avery is a Managing Director and Head of Financial Sponsors Group at Raymond James & Associates. Mr. Avery joined Raymond James in 2000 as a Managing Director in the Technology and Telecommunications Group. In 2006, he assumed leadership of the newly formed Financial Sponsors Group. Prior to joining Raymond James, Mr. Avery headed the Investment Banking Division and was Chairman of the Equity Capital Committee at Wachovia Securities. Prior to that, Mr. Avery was a General Partner at both Norah Mosley Partners and Summit Partners. Mr. Avery began his investment banking career with the Robinson Humphrey Company in 1977. Raymond James & Associates is a diversified middle-market investment banking firm. With approximately 150 investment banking professionals, the firm supports a national practice focused on the public equity markets as well as financial advisory services to include mergers and acquisitions advisory. Over the past 5 years, the firm has managed over 400 public equity offerings, including initial public offerings, and completed 250 M&A advisory and private placement assignments. And at the far end of the table is Mr. Randy Karchmer. Mr. Karchmer is a Managing Director and co-head of the Mergers, Acquisitions, and Financial Sponsors Group of Morgan Keegan. Mr. Karchmer joined Morgan Keegan in 1994 and is responsible for the firm's M&A and financial sponsors practice. Since 1989, he has focused his career on advising middle-market clients in exclusive sale, recapitalization, and private equity-raised transactions. Before joining Morgan Keegan, Mr. Karchmer was a corporate attorney with Mutt, Schellis, Dennenberg, Ament, and Rubenstein in Chicago, Illinois. Morgan Keegan & Company is a premier regional investment firm offering full-service investment banking, securities brokerage, wealth, and asset management. Morgan Keegan's investment banking group provides merger and acquisition advisory, public equity, and private capital services to public and private middle market companies, as well as private equity and venture capital funds. The investment banking team has closed 400 transactions representing more than $100 billion in deal value since 2000. As you can see, we have a lot of firepower sitting up here. This should be fun, so we'll get right into the questions. Question 1. Recognizing that none of you are economists, what are you currently seeing within the sectors you follow about how the current economic climate is impacting the view of your clients relating to their plans to enter into transactions or raise capital? Jim, why don't we start with you?
Well, first of all, Kurt, thank you, and thanks HA&W for sponsoring this, and it's always nice to see Randy and Tom. One of the nice things about being in the South in our business is that we compete, but we stay friendly, so it's nice to see some old friends. And I'm a little hesitant to try to give you any sort of overall economic thesis because I'm not an economist. I don't play one on TV. We're sort of in the weeds. Somebody once told me, asking an investment banker what the economy is going to do is like asking a fish why the moon's effect on gravity makes the tides go up and down. You're sort of in the water, but you don't know why. But having said that, I'll make a few global comments. Obviously, corporate profits have snapped back quite smartly since the lows of the fourth quarter of 2008. We've also seen productivity gains across the board. They've been very, particularly in some of the sectors that we cover, and industrial, consumer, restaurants would be three examples. We've seen dramatic cuts in labor costs. We've obviously seen efficiencies in terms of capital, particularly working capital, and that's all helped boost earnings, and I think it's helped boost confidence. We also see a lot of corporate clients today that are extremely cash rich, that are benefiting from historically low interest rates on debt instruments that have been in place for a while and that are floating rate. In many cases, we still have corporate clients who haven't had resets, so they don't even have LIBOR floors. They're just LIBOR-based borrowers, and essentially, if you're a LIBOR-based borrower today and you're even close to investment grade, money is close to free. I mean, everybody talks about carry trade. I mean, the whole world is a carry trade today. So I think that companies are well positioned to think about transactional markets and, frankly, to think about capital formation markets. I guess that I'd also say that, and I want to sort of be careful as to how I say this, but I think that there are some countervailing uncertainties. I think that a lot of our clients, while they're optimistic in the near term about their own businesses relative to where they've been over the last 18 months, and they're generally more optimistic about the economy on the whole, as they look sort of to the intermediate and longer term, still feel that there's a fair amount of uncertainty out there. I think that there's a lot of concern over the direction of interest rates. We're going to have to fund the deficits and the stimulus programs that we've created. I think that in the long run, although the dollar is strengthening this week, there's a lot of uncertainty around where the dollar will be and what it's going to take to defend the dollar. And I think that generally there's a lot of subjective concern about the basic foundations of our economy and whether they've been damaged dramatically over the last couple of years. And obviously only time will tell. But having said all of that, I think that the overall mood among our clients is markedly better than it has been over the last couple of years. And I think that we'll see an uptick, a significant uptick, and we are already seeing it this year in activity. Just anecdotally, we are, as you said earlier, Kurt, we're part of a consortium of firms around the world called M&A International. A lot of the work we do is in partnership with our alliance firms around the world, and twice a year we get together as a group to just kind of exchange best practices and to talk about the world. And we invite selected clients to those meetings. We do what's called a Strategic Acquirers Forum. This year the meeting is in Stockholm. We limit the number of strategic buyers who we allow to come to this meeting, and it is sold out now earlier than it has ever been before, which surprises me.